Welcome to Dual Edge Research, different markets, one research philosophy. We believe successful investing isn't about predicting the future. It's about consistently identifying higher probability opportunities through objective, data-driven research. That philosophy drives everything that we do. Whether we're analyzing thousands of stocks or hundreds of thousands of commodity spread combinations, the process is always the same. Filter, rank, select, execute, repeat. That research powers two specialized newsletters. The Bull Strangle newsletter applies the research process to stocks and options, identifying high-quality companies for systematic option income. The Smart Spreads newsletter applies the same discipline methodology to seasonal commodity future spreads. Through research into seasonality, historical performance, forward curves, and trade selection, our goal is simple. Identify higher probability opportunities backed by objective historical data. Today we're focusing on smart spreads. Let's begin. In the last video, we explored why when you enter a seasonal commodity spread can have a significant impact on historical performance. A seasonal opportunity may exist for several weeks, but history often shows that certain entry windows consistently outperform others. Timing matters. But entry timing is only half the story. There's another decision that many traders overlook, one that our research has shown can have just as much influence on long-term results. Let's talk about the front month. Most traders begin by selecting a market, deciding whether to buy or sell, and then choosing contract months that appear to fit the seasonal pattern. Our research took a different approach. Instead of immediately comparing individual calendar spreads, we first asked a simpler question. Which front month has historically produced the strongest opportunities? That question became another powerful filter in our research process. Let's use corn as an example. Suppose we've already determined that sell spreads have historically outperformed buy spreads. Rather than immediately comparing September-December, September-March, or September-May spreads, we first evaluate each front month independently. Has the September performed? What about December? March? What about May? Each front month develops its own historical profile, and the differences can be surprisingly significant. Why front months differ? These differences aren't random. Contract cycles are influenced by recurring market forces such as planting seasons, harvest schedules, storage economics, and commercial hedging activity. As a result, two traders may trade the same market in the same direction during the same week, yet experience very different historical outcomes simply because they selected different front months. Front month analysis becomes an incredibly effective screening tool. Instead of evaluating dozens of possible calendar spreads equally, we first identify the front months that have historically demonstrated the strongest combination of profitability, consistency, and risk. Only then do we compare the individual spread combinations within these preferred months. Each layer removes lower quality candidates and increases confidence in the opportunities that remain. So far in this series, we've explored direction, entry timing, and now front month selection. Each step brings us closer to identifying higher probability commodity spreads. In the next video, we'll examine another important layer of the research process, why three legs can often produce better historical results than traditional two-leg spreads. We'll look at the historical evidence and see why, in many markets, adding a third leg has improved win rates, reduced large losses, and often increased average returns. Thanks for watching. If you enjoyed this video, visit bullstrangle.com for additional research, education, and the Smart Spreads newsletter. For a deeper dive into commodity spread trading, be sure to check out my book, Trading Commodity Spreads, which is available on Amazon. We'll see you in the next video.